This is Mark Anthony with Mercury Time Price Analytics, and this is our end-of-day daily algorithmic video update for Friday, January 10th. I'm recording this on Saturday. Later on in the day, we'll record our weekly update, which will take a look back at the entire past week. But we wanted to record a daily update as well, just to focus on the price action yesterday, because there were some significant occurrences, happenings, events, whatever you want to call them. Now, what you're seeing on the chart right here, this is the live chart feed. Obviously, it's not running because we're recording this on Saturday. But the live chart feed is available for our subscribers on Zoom. We give them a new passcode every day, and so they can see our algorithms running in real time all day long with live commentary from me walking our traders, subscribers through every step of the trade. The reason we run ES on this screen, the continuous contract, and the March contract here is two reasons. Number one, the time cycle that is running over here on this right screen. This is our standard cycle primary day trade oscillator. We also have longer term cycles for swing trading and even longer cycles for position trading. So we keep the standard day trading cycle on this side, the swing trading cycle on this side. The other thing that's different is we have two sets of proprietary pivots. We have our wide range, long look back Mercury bands, and you see those on this chart. And you see our more granular levels, our Mercury dynamic pivots on this chart. So by having two charts, the continuous and the March, it allows you to see the standard time cycle day trading oscillator, as well as the longer cycle swing trading oscillator, and also see both sets of pivots. Now, these pivots are fixed points, so it doesn't matter what cycle chart you're looking at. The pivots don't change. So this Mercury band upper extension number 23269, it's the same over here. But these pivots, we call these profit capture pivots because it takes the guesswork out of trading. These are areas where price will, all throughout the day, stop right to the tick at these levels. And some of these, the second time they're touched, they act as not support and resistance pivots, but acceleration pivots where you get this. So you're in a short, our algo on our standard day trading cycle, triggered short at 8 a.m., hour and a half before the market opened, right up in here, 32.8182. The time and the price that triggered at was very significant yesterday, and it may have considerable significance over the next couple days, couple weeks. I'll talk about that in a minute. But that's why we run both these. We also have some additional indicators on the live chart for our members. Down here we've got the inverted VXX. VXX is a volatility measurement of ES, but if you're just looking at the regular VXX, it's a mirror image. So if EX is going up, VXX is going down. So to keep these in the same orientation, we have the inverted VXX. And we have a timing cycle on there too, and we run that at a different time cycle than these so that this moves a little bit faster, and it gives us some early warning clues before ES is going to change direction or continue with a more vigorous move in the direction it's already going. We also have Microsoft and Apple. And you see on here, our algo, more than 2 hours before the market opens, our algo produces a single daily bull bear pivot. And you can see it up here on ES for Friday. It was 32.8013. That's going to be significant. I'll tell you about that in a minute. But the same methodology allows us to create a single daily bull bear pivot for any stock that trades in the extended hours. So here you have Microsoft, Friday single daily bull bear pivot, 162.07, Apple, 309.47. If you trade individual stocks, or you trade SPY, or SPY futures, we give this to members every day. And I always mention that time is much more important than price. And evidence of that is that we can run these incredibly accurate single daily bull bear pivots over 2 hours. 2 hours. It's not exactly 2 hours. Trust me, it's more than 2 hours before the market even opens. So having said that, let me switch over here to SPY. So the single daily bull bear pivot for Friday, 327.08. I have traders that were buying puts at the open, and I've got one trader that was buying Friday expiration puts in the open because the oscillator triggered short at 8 o'clock, hour and a half before it opened. So he's buying these puts that expire Friday and had a heck of a day, just slowly letting them go as price went down. So our system is very flexible, whether you're a day trader, a swing trader, trade ES, NQ, because we have the same algorithmic oscillator for NQ as we do ES. Whether you like to trade Apple or Microsoft or SPY options, that's all part of our basic service. And you get that for a ridiculously low amount of money. I've got traders that yesterday, I mean, the algo was short from bell to bell yesterday. We've got traders that had just started that made enough profit yesterday to pay for their subscription for a very long time. All right, so let's get back to the meat of why we're recording this video. So I want to switch over to, we'll take the ES contract. Now trading, you know what, let me go back here for a minute to SPY, because I don't have, although I've got our algo running on here, I don't have the algorithmic pivots. Those pivot levels, we call them profit capture pivots because they give you very precise benchmarks, very precise prices that you can take profits down into when the system's short and take profits up into when the system is long. Now the problem if you don't have that type of algorithm, well, how do you know where to take profits here? Or if you're short, are you going to take profits here? I don't know. There's nothing on the screen to tell us that whether this is going to turn back up or continue going back down. Same thing here. Same thing here. Now, on our charts with the pivots, you had pivots right here. So when it came back down and it came up here and stopped, and the algo didn't come anywhere close to flipping long, because, by the way, it doesn't do that very often. Since the day after Christmas, every trading day since Christmas, the algo has been either long bell to bell or short bell to bell. The exception was Thursday, the 9th. I mean, that was just, we knew going in that day was going to be chop due to positioning going into the payroll number on Friday. So Thursday was a nothing day. We told our subscribers you're likely not to get any signals one way or the other. But with the exception of that, the system's nailed it, bell to bell, every single day. And we can go back months and I can show you the same thing. But here's the point. It rarely flips intraday. The only time since Christmas that the algo flipped from long to short or short to long, intraday, was New Year's. So right after Christmas, it's either long from bell to bell, short bell to bell, picks up the whole thing, every one of those days. On New Year's Eve, it was short off the open. ES came down, I don't know, 20 some odd handles, and then it stabilized and it flipped long early afternoon and rode it all the way back up into the close. But the point is, this algo is timed, so it's very patient. It doesn't flip you in and out. And that takes a lot of the guesswork out of trading, because when you build an algo based on price, these kind of moves up here are going to whip it out and turn it long. Well, you don't want to be long. It was trend down all day. All right. So the timing mechanism in this realizes that you're going to get bounces along the way. You're going to get people that are short that are taking profits, or you're going to have people that are trying to pick bottoms here. And the algorithm didn't get anywhere close to flipping long at any time during the day. Now, imagine again, you're trying to trade this with nothing on it. Now, where are you going to take profits? Well, little bit easier now, huh? So the algo triggered right in here around 32.83, a little after 8 o'clock. So this first move down we got, you could have taken profits anywhere below this line. So this is our tick point of control short cycle. We run a short cycle and a long cycle of our proprietary tick algorithm. The long cycle's down here. It came down right to it later in the day. But if you're short from 32.83 and you get this move down, when this line here broke, which was that single daily bull bear pivot, well, you know it's going to go to the next line. So when this breaks, you've got your stop, or not your stop, but you've got an order in to take profits within a handle and a half of this line. So there you go. You book 6-7 handles on the first part of your trade. We recommend trading in thirds. So if you're in this thing short 32.83 and it comes down here and you know there's this pivot at 32.77 and change, well, then you put that order in to take profits about a handle and a half, and boom, you just book 6 or 7 handles on the first piece of your trade, and you still have 2/3 of it left. There's no guesswork. Yeah, I mean, our traders literally can put their orders in within a handle because ES will go within a tick, 2 ticks at the most, but normally within a tick of these lines, and quite often to the penny, because the algorithm, all these levels are decimalized. It's not 2, 5, 50, 75. It's to the penny. All right, so you get a bounce back up here. Algo didn't flinch, didn't even come close to flipping long. Then we get this move down that breaks this tick point of control again, comes down into here. Well, that's a good place to take the middle on your position. So that's another 11. So you book 6 or 7 on the first piece. You book 11 here with no guesswork. It came down into the green dash line as the multi-day trend short cycle. And where do we get all these? In the morning, before the market opens, we run our algorithm. It has to be run at a precise minute pre-market. And for those of you that are watching this for the first time, you probably think I'm kidding. I'm not. ES runs on very, very specific time cycles. And even if you figure out what those time cycles are, if you don't run the algo at the exact minute that we do, you're not going to get results anywhere near what we have here. And so that's part of the secret sauce. It's knowing what the time cycles are and then knowing the exact time of day to the minute pre-market that you run them. That's why this is so accurate, day after day. Look, if we had this level of accuracy 1 day in 30, that'd be pretty cool. But our system does it every day. Every day. So we put these out in the morning. After we run the algo, we export that data into this spreadsheet. We post this on our Slack channel for our members, and they see all these pivots. Now, you can't trade an Excel spreadsheet. So right after that algo is run, then I take those same levels and I put them on the chart. So on the live chart, you're seeing this. All right, so you don't have to take these levels and take 20 minutes and put it. We do this for you. It's right on the live chart. The only reason we put that data sheet out is just to let you know here's where the levels are. Print it out, keep it next to your desk. But you don't need to do that because it's right on the chart anyway. Just a couple more things about trading yesterday, and I want to talk about the price and the time at which this trade triggered, because it's significant. So we come down into the 69. Now, the more pivots that are clustered at any particular area, well, you can imagine the more significant it is. So we had our trend confirmation pivot. When the trend confirmation pivot breaks, it means that the short-term trend is changing. And that short-term trend can mean just for that day. It can mean a couple days. But if you start breaking the trend confirmation pivot, then you start breaking these deeper trend pivots. The orange pivots are based on a trend algorithm. So there's a mathematical connection between these. So if you break the trend confirmation pivot, then you come down here and break the back test pivot, which is just a deeper trend indicator down here at 55. Now, we didn't do that on Friday, and it needs to do that within the same day because these levels update every morning. But the point is, look at how precise this is if you're trading. You could take the first piece of your profit, 6, 7 handles, and knowing exactly where you're going to take profits. You're not guessing at it. Take the second piece either here or here for either 11 handles or 14 handles. And then, as I told our traders, be patient with your runner. The runner is the last piece of your trade. I said, be careful taking off the runner because these white dashes are an algorithmic representation of volatility. So, and there's 2 of them on every bar. So as ES is coming down into this level late in the day, there was no compression in volatility. The volatility was still expanding, and that told us that this was going to break. And so the next level down after this is what? 59.38. So I told traders, put take your runner a couple handles within this because it is very, very likely that you're going to get a bounce from this level. And why let this thing run back? Like in this case, you hit a low of 32.60-ish and, then have a 7-handle bounce. And you don't know if it's going to go all the way back up here, and then you're giving back profit. So our traders, some of them did what we said and put a stop right here within a couple handles. And then the ones that did, we said, that's fine, because you don't know if this is going to break either and continue lower. And we told them, you want to take this off right in this 63, 64. And they did. And you got traders that are booking 20, 30 handles a day, yesterday on a 3-lot. And look, the move itself from top to bottom, 32.83 down to 32.60. That's 23 handles. So let's say, for example, you were trading a 1-lot. And hypothetically, you caught the exact ideal entry and you bottom ticked the low and covered your position. It's 22, 23 handles. Well, what are the probabilities of catching the exact ideal, optimal entry in terms of time and price and bottom ticking the low? Not a good probability, right? So the algorithm indicates the entry. The profit capture pivots help you manage the trade so you're maximizing your profit as ES goes down. So, now you're talking about a 23-handle move that allowed traders to book 30 handles. You book more handles than the move itself, and that's why this works the way it works. Because if you follow our rules, get in the trade when the algo triggers long or short, and you follow the trade management rules, you will literally book more handles than the range of the day. Trust me, it does that. All right, now the other reason that we knew that there was going to be an issue on the long side on Friday is because the market going into Friday was historically overbought, historically. When we run the Mercury bands, which are run at night, the dynamic pivots, the ones with these descriptive names, trend confirmation pivot, back test pivots, and such, those are run in the morning. That's what we showed you here earlier. At the end of the day, based on RTH close, we run our Mercury bands. And I call them Mercury bands just to use the same metaphor of Bollinger Bands. They have nothing to do with that. But if you consider a Bollinger Band just in structure, you got an upper band, a lower band, and a middle band. So I figured people are familiar with that metaphor, so that's why I call these Mercury Bands. Upper band, lower band, but we give you two mid bands here. And these have nothing to do with the methodology of Bollinger Bands. These are time algorithms. They do take into consideration price, but the majority of the equation is time, and that's why they're so accurate. Because what they do is they go back and look at not just price levels that were important, but they look at how long price was in those levels. And the longer price was trading in and around a particular level, the more weight the algo gives to it. And that's why these levels are. I'll pull the chart out in a minute. I'll show you what I mean. But normally, these Mercury bands are right in the middle of the trading range for that day and the next day. These lower extension and upper extensions, typically ES will drift up to these upper extensions in Globex, but here's the punchline. Let me pull this chart back a little. In fact, I need to switch over to the continuous contract to show this to you. Here we go. All right. So here's the Mercury bands. Here's the upper extensions, 1, 2, 3. You had ES trade up into the third upper extension. And these aren't standard deviations, but they're probably close to what a third standard deviation would be, if I had to look up what that number was. But the point is not that ES drifted up here. It's been doing this. The thing that was amazing to me is how long you traded in the area between these extension algos. So it seems very likely that ES is going to have to come down a little bit and trade. Now, these bands are going to update on Sunday night before the open, so they may well be up here. But the point is, what you had on Friday, where the whole day is trading within the boundaries of these upper extensions, is just nuts. Absolutely nuts. And let me go on the record as saying something right now. Zero Hedge published a really good report. I forget which analyst did it, but if you look it up, it was posted yesterday or yesterday evening. It's about options gamma and the area that ES should tend to bounce within, acting sort of as shock absorbers above and below, is 3,300 to 3,250. That's a good segue to get into why I think you're going to break 3,250. See this line right here? This angled line, this is an algo price regression line. The only time we ever put a line on the chart that's not horizontal is when I put one of these regression lines on. And by the way, all of these horizontal lines, we never manually draw support and resistance. These are all algorithms that give us this. I mentioned a minute ago I was going to pull the chart back out and show you where the algo is picking these levels up from. Well, this lower extension is picking it up from this price congestion zone. This level's picking this up from here. These two Mercury bands, and this one, this third one as well, it's picking up this from here to here, and so on and so on and so on. So there's a reason that these are so precise, because it doesn't just analyze price, it analyzes how long price is trading within certain ranges, and that's why time is way more important than price. That's a lot deeper, lengthier conversation, but for now, just suffice it to say, if you're not familiar with WD GAN, it's worth becoming familiar with GAN. And GAN was the first proponent that identified that time is clearly more important than price. All right, so enough about that for now. But anytime we put a line on the chart that's got an angle, that is an algorithmic time price regression. It's not a linear regression line. It's not. We don't do these using any of that methodology. But in one aspect, it works similarly, because regression lines tend to be binary price points. Now, this goes back many, many moons. It doesn't matter how long it goes back. It just goes back a ways. All right? And these algorithmic time price regression lines, they're not designed to be channels. They're designed to bisect places where the maximum amount, the highest volume was. Okay? And you take this line up, it becomes very binary. Well, I released this at 2 a.m., the East Coast time, 2 a.m. on the 10th, an hour before the European market opened. And at the time, let's go back to 2 a.m. In fact, I've got a screenshot of it. Here we go. So this is when this was released. It's on Twitter. I put it out between 2 and 2:30 a.m. Just before the European market opened on Friday. And you can see at that time, This was coming in just a tad above 3280. You also see that it had confluence with this extremely overbought Mercury band upper extension number 3 at the same price. So the reason I put that out, I couldn't sleep that night. But fortunately, I was up at 2 a.m. and didn't have anything else to do, and ran this algo regression line. And because these algo regression lines are based on time, what it projects is, if you take this up a little bit further, and knowing the European Open is coming up soon, what it projected is that we would have a significant time. I'm not saying an all-time high. I don't make those kind of projections. You can't trade off of them. Who cares? But I'm saying it's likely that 3287 is a high of significance. Why? Because you have a regression line that's going back months, several months, okay? Sometime mid-year last year, put it that way, that comes in at the same price as this third upper extension at a time where ES is historically overbought. Now, you want to see the punchline? Watch this. And we're going to talk about this in my weekly blog update. Everything I do is on videos, but once a week I do write a blog. And it's going to be entitled Triple Play. Because what you had is the regression line coming in a little over 3280. You've got this upper extension number 3 coming in at 3281.39. And what's the third part of the triple play? What price did the algo trigger to go short? Right in here, same price. So you had the algo trigger, you trigger a short, our proprietary oscillator, right at the confluence of this regression line that went back many, many months. And right at the same confluence, all three of these points came together. Boom, right there. 3282-ish. The trade short triggered within a handle of that. I don't believe in coincidences. I mean, we're talking about mathematics here. You know, it's not a coincidence that 2 times 2 equals 4. It always equals 4. And so when you start seeing mounting mathematical evidence on a time-price basis, it tells us that this is likely a top of some significance. Now, again, it doesn't mean it's the all-time high. It doesn't mean it won't be broken on Monday. But it tells us that, you know, we're starting to build some evidence here that we're getting into this rarefied air, and this could stand for a while. So, you know, everybody's talking about 3,300, and you have folks projecting the high of the year is going to be 33, blah, 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 blah. And how do I make money off of that? Genius. What if we go to 2,900 first? I'm not saying we will, but if you're telling me that the annual, and this irritates me because this is bullcrap. Someone's saying, you know, if we're at 3287 on Friday, and some knucklehead says, well, my high for the year has got 33, blah, blah, blah. What does that imply to you? Well, stay long. We're going up another 30, 40 handles. Well, that's wonderful, genius. We may also go down 200 handles first. And so you don't put a trade in and you know, just on luck or analysts that say this kind of garbage. You trade what happens in between now and there. Look, if this goes down 50 handles, 100 handles, we're going to trade it. And after that, if it goes back up and prints a new high and goes over it, we're going to trade it. I'm agnostic to whether bulls are right or bears are right. I could care absolutely less. It doesn't matter. We're trading. Okay, let the market do what it wants to do. Let it go up, let it go down, let it go whatever. It just doesn't matter. So those predictions are absolutely useless. You know, if you want to have financial news on while you're trading, wonderful. Turn the sound off. All right, so that's it for today. apologize for that little dissertation, but these chuckleheads that come on TV are not there to make you money. They're not. Okay? So, if you have any questions, I didn't have our website address up here like we normally do. It's mercurysignals.com. That's MERCURY, signals with an S, mercurysignals.com. We are running a special this winter. It's not going to be available much longer. 62% off our regular rates, 7-day free trial. We don't bill you until after the free trial, and when billing starts, should you decide to remain after your 7-day free trial, we bill weekly, not monthly, and you can cancel anytime you want. So if you stay for 2 weeks, the first week's free, the second week you get billed for. We don't bill you a month in advance, so you can cancel at any time. Look, you owe it to yourself if you're a trader to try out our service. Because I'm telling you, there is no more accurate way to day trade than this. There is no more accurate oscillator to give you entries long and short. And there is no more accurate system anywhere in the market, institutional or otherwise, to give you a roadmap to precisely taking profits. I'm just telling you, this does not exist. There's proprietary elements in this that no one will ever figure out. And I'm a very humble person. The people that are our subscribers, they'll tell you that. I'm being a little effusive about this right now because you owe it to yourself to give this a shot. I've got traders booking 20, 30, 40 handles a day with relatively small accounts. You know, people that are trading 3 lots booking 30, 40 handles a day. Come on. So please here we go. Please give our service a shot. mercurysignals.com. We want to help you out. We want to provide this information for you to benefit you and your family. mercurysignals.com. If you have any questions, you can email me directly at markanthony@mercurysignals.com. And lastly, look for a weekly update video coming this weekend, as well as our weekly blog. Those will be posted on Twitter, Mark Anthony, or at MC2085, and they'll also be available on our website. So, went a little bit longer than we intended, but this could be a very significant day on Friday. We thank you so much for being here. We really do appreciate your time. God bless you. God bless your family. And we hope to see you again soon.